What's up, everyone? Dylan here. I wanted to hop on to do another episode of the weekly analysis video where I'll talk about what's been going on in the market as well as some of the key areas that I will be looking at going forward. There's been a ton of volatility in the market over the last 2 weeks. In fact, the S&P from peak to trough in that time period sold off as much as 5%, whereas the Nasdaq sold off as much as 8%. So definitely big moves across the board. A lot of people were bearish heading into Friday, despite the S&P and the Nasdaq selling off 6 consecutive days in a row. So I wanted to come on here and stress that, rather than focusing on near-term, momentum and sentiment, it's very important to take a step back and look at the macro views as they can, give you a clear sense of context to give you telltale signs of what the next move in the market may be. So I wanted to show you some of those more macro views that I posted on Thursday right upon the close, heading into Friday. So I said there's a few things worth noting at the close that bulls have on their side heading into Friday. As you can see, I have a decent list of 6 different bullet points talking about some of the bullish pieces of context, despite the fact that the trend and the momentum was clearly down. So I came out and gave somewhat of a contrarian viewpoint. And the most important one is this one here, because I used that as a line in the sand on Friday. So Friday morning during pre-market, I said ES hit the critical trend line support stemming from October 2023 last night. Very important line to keep an eye on in the near term. I said if that line breaches, which at the time was at 58.60, and the VIX also sustains value above 19.4, which was Tuesday's highs, selling pressure should continue. On the flip side, if bulls manage to defend that line or quickly recapture it on dips below, bulls have a real shot at presenting a relief bounce. And in hindsight, that's exactly what occurred. So let's talk about some of the context leading into Friday that ultimately gave me a general lean that Friday was probably going to bounce, which was basically opposite of what many other people assumed was going to be the case. So, like I said, this was the very, very critical line stemming from the October 2023 lows. And as you can see very, very clearly in hindsight, that's exactly the area that the S&P bounced at on Friday, which essentially caused the index to rally a little over 100 points or 1.77%, from the lows to the highs. That wasn't the only line, though. Like I said, let's go into other pieces of context. There was also the 200-day moving average on the S&P, which not only was the case of some of the support on Friday, but that's what also coincided with the August lows as well. You could see not only did S&P futures hit the 200-day moving average in August as well as that trend line, but that's exactly the 2 pieces of confirmations that occurred on Friday as well. On top of that, you also had QQQ. This was one of the things that I posted in that Discord post. It was testing the January 13th, or you could say it was the year-to-date lows at the time, right? That low, as well as it also tested the anchored VWAP from the August 5th lows, right? If you put an anchored VWAP stemming from August 5th lows, that's exactly where the QQQ came down into. On top of that, you also had Tesla participating in a nice bounce finally, okay? Not only was it at the lowest RSI point on the daily chart in over the last year, right? The last time it was down at that, oversold level, it got down to what was that? As much as, or as low as 25.19 on Thursday before bouncing Friday. And the last time the RSI was that low was last January of 2024. Okay. So on top of that, you also had it bounce as well at the 200-day moving average, which coincided with the low from the early November election day gap up. Okay, so that was yet again another piece of confirmation. On top of that, you had Bitcoin bouncing as well, and for anyone that says that Bitcoin and the S&P don't align, I would say otherwise. In fact, if you look at a chart of Bitcoin and overlay a chart of TQQQ, which is the 3x levered NASDAQ index, they look very, very similar. In other words, they tend to really, really correlate and do a lot of the same movements. In fact, going beyond that, look where Bitcoin bottomed, which was on August 5th of 2024. Does that sound familiar? That was the same exact low that the SPY had as well, right? August 5th of 2024 coincided with that low right here. So is it a coincidence that the Bitcoin and SPY bottomed on the same day last year, right? That's for you to decide, but I don't think that there's much coincidence there. So this thing also came down into the 200-day moving average, as well as being oversold, the most oversold since, a long time ago. Since when? Since August of 2023. Okay, on top of that, you also had MSTR hitting the 200-day moving average as well. So clearly, I'm kind of doing a rapid fire here, but there was a lot of different pieces of context leading into Friday where different instruments hit around the same time that produced a nice bounce higher. On top of that, the fear and greed index was at extreme fear. So upon Thursday's close, it was at 18, and then Friday's close, it was still technically in extreme fear. How is this calculated? All right, we go down here and you could see right here, the fear and greed index is a compilation of 7 different indicators that measure some aspect of stock market behavior. If you want to, pause this and read that, feel free. But essentially, this is very, very important to look at. And for me, I only look at it during both extremes. If it's in fear, neutral, or greed, I really don't look at it. But if it's in extreme greed or extreme fear, it can give a nice edge when combined with other pieces of confluence. Okay? We go to the timeline, and you could see the last time it was below 20 was when? August 5th, right? If I zoom in here, right? The last time it was below 20, like I said, August 5th, 2024. And if you don't know by now, I've said it like 3 other times in this video so far, but August 5th coincided with what? When the SPY, S&P, NASDAQ bottomed last year in 2024. So again, a lot of pieces of bullish context going into Friday that many people may have overlooked if they were so focused in on the near-term intraday factors, right? You have to, time to time, at least, you have to take a step back and look at the macro view, because if you don't, you can be, really, really biased and be missing out on some key context, okay? So when you have such extreme fear in the market, it doesn't take much to flip the sentiment, as a lot of people are leaning on the bearish side of things. So with a lot of people having their positioning on the short side, right, doesn't take much for the S&P to rally, where those people that are, that are weighing really, really on lopsided in terms of being short, it doesn't take much for those people to get stopped out, which essentially causes a short squeeze with those folks having to cover by stopping out of their shorts and fueling the market higher. So that's where you'll have, a massive move to the upside, as we saw on Friday, which was very, very aggressive, very quick, and so on and so forth. So going forward, okay, this is very, very important. I wanted to talk about timing. Timing has been a key factor of what we've seen over the last week that a lot of people don't talk about, okay? I could go on and on about different technicals. In fact, on Thursday night, I did a webinar with the Academy folks, and I had a dialogue of like a 40-minute stretch of the bullish thesis that I had going into Friday, right? Talking about different technicals, time factors, fundamentals, so on and so forth. So clearly, I had a lot of different pieces of context going into Friday. But going forward, the time factor is going to be very, very important. So let's talk about this. What do I mean by time factor? First off, I want to show you 3 dates that I outlined for the Academy folks, right? This was posted on February 12th, about 9 days prior to the first time event coming into effect. Okay, so I gave 3 different dates: February 21st, February 28th, and then March 21st. Let's talk about these. These dates tend to flip sentiment or pivot sentiment depending on the price action going into them. Very important, okay? So let's talk about these one by one. February 21st was Apex. Where was that on this chart? That marked the first big decline of this past move that we've seen in the last 2 weeks. So essentially, I can argue that that date specifically was the real flip in sentiment that we have seen. Going forward, where did this sell-off lead into? Is there a coincidence that it led into this next date, February 28th, which happened to be Friday? Okay. Again, what happened? It was a pivotal point in the overall sentiment and trend. We had a massive move to the downside, 5%, peak to trough on the S&P, which led into February 28th, which was the very, very next date that I outlined. What happened on that date? The trend came to an end and moved higher. Okay? So very, very important. We sold off from Apex and then sold right into the MSCI rebalance, which was the first rebalance of 2025, which caused a move higher. Now, the next date, which has not occurred yet, is what? It is March 21st, which is both Apex and a rebalance date. So March 21st is this, right? I'm going to go ahead and mark a vertical line at March 21st. Okay, this is the next area that will be very, very important to watch. And let me explain myself. Okay, so going forward, this is what I am watching. Okay, 2 different scenarios. And I wish it was as easy as me knowing exactly what's going to happen from now until March 21st. But in reality, if I told you guys that I knew exactly what it was going to happen in the next 3 weeks, I'd be absolutely lying to you. Okay? However, like I said, these dates matter when it comes to the price action leading into them. And then obviously I'm going to go ahead and outline the remaining dates that are very, very important to look out for the Academy members. I will not do that publicly on here. I'm just making that clear in case anyone comments that. Okay? So what I'm looking at going forward are 2 different scenarios. Either we get a rally that continues after what we saw on Friday, something that looks like this, right? Doesn't have to be straight up. If it is, cool. If not, no problem. But let's just say we get a rally, right, into that area. Then I would assume, or I would kind of be leaning on the side that if we do rally into that, that might be where sellers kind of come into effect for another move to the downside. On the flip side, if the S&P, kind of rallies from this area and fails where sellers then reload, this is my other scenario, right? Let's just say we come up here, right, to this 6,000 area, then we start to sell off. What can then happen is a price move into that area, right, of the March OPEX, March 21st OPEX, right? And if we sell off into that date, then that could be a good buying opportunity for a move to the upside. Okay, so like I said, very, very important. I don't know if the market's going to continue up to that March 21st date or if it's going to sell off into that March 21st date, but whatever it does, depending on the price action into that, there could be a good edge that we can kind of lean on. So there is a real edge in using those dates as a guide. Are they flawless? Do they work every single time? No, but analyzing the price action into those dates can be very, very helpful. Okay, so let's just say hypothetically the market kind of dilly-dallies and then sells off into March 21st. What's an area that I will be looking at going forward in the near term, before March 21st to kind of gauge price action, in case this area gets tested. Okay, and what I want to talk about is I'm going to use US 500, which is the cash index of the S&P. I want to look at the 50-day moving average. Oh, nope, not the 50-day. Let's see. Oh, yeah, it is the 50-day. But I got to change this to daily. One sec. Okay, so what I want to look at is the 50-day moving average on the cash S&P index. Okay, as you can see, this has been a pivotal area, right? It was previous support, and then just last week, it acted as key resistance where sellers reloaded there not once, but twice. Okay, so I'm going to go to a 1 hour. This line, this 50-day moving average also coincides with the 6,000 psychological whole number. So there's two different factors behind why I believe this line is going to be very, very important. If and when the US 500 or SPX, whatever floats your boat, it's the same thing, right? Very, very similar. Whatever you look at, if and when the cash index of the S&P tests that 6,000, which coincides with the 50-day moving average, which is currently at 59.98, right? Close enough. That's where I want to gauge in the near term. If you're a bear, you want to see sellers reload in that general area for another leg down. If you're a bull, you want to see not only price get above there, but then price gets defended on dips above, okay? And that would be a solid sign of resiliency, and that the fact, and the fact that the bulls are very, very strong and, have the strength to push value even higher. So, again, like I said, near term to the upside, this 6,000 to 5,998 level on not ES futures, but on the S&P cash, SPX or US 500 is going to be a very, very key area to gauge. Beyond that, I want to make sure that I'm looking at and analyzing the price action leading into that March date on March 21st. Okay, because like I said, going from the two other dates that I gave, February 21st into Friday, February 28th, has been very, very helpful with kind of coming up with a general edge or general idea of where the market heads next. So if you like this video, give it a thumbs up. Give me any comments or feedback. I appreciate every one of those things, and I'll talk to you guys soon. Peace.